8 o'clock, and we will begin the work session of February the 9th, 2023. I'll ask the board, have you had a chance to review the work session minutes for January the 5th? Are there any corrections or deletions? Hearing none, the minutes will stand as written. Also, item B is the review of the January 31st, 2023 special call work session. If you've had a chance to look at the minutes, is there any corrections or any deletions? Hearing none, these minutes will stand as written. We're going to go straight to item number 2. We've got with us this morning staff from the Putnam and the Hancock CPAs, and I believe Mr. Hancock is going to present the FY22 audit report for us today.
Good morning.
Morning.
I guess I need to speak a bit on this. Can you hear me okay?
Okay.
You have in front of you, I think, the bound report in blue, plus there's an insert of a letter. So I will first go over the letter, and I know we've got I was going to say new, but not here. So somewhat familiar format that I'm going to go over here with the financial statements and the reports. But the letter is a letter that we're required to present to those who are responsible for the governance of the city of Fayetteville. And that letter, in summary, I will go through it a little bit. It explains our responsibility to render an opinion on the financial statements, but it is the city of Fayetteville's financial statements and their responsibility for preparation of those statements. Another paragraph in there, it talks about required supplementary information, which that information is presented towards the back of the report, and it deals with pension information and post-employment benefit information, and then an upfront section on management's discussion and analysis. Another paragraph in there talks about estimates that are in the financial statements, which are primarily dealing with the allowance for doubtful accounts or uncollectible property taxes, and also unbilled revenues down at the proprietary fund at FPU. And then another paragraph deals with accounting practices. And this year, and I should back up that the financial statements do include the city of Fayetteville as the government funds, the city of Fayetteville schools, and also then the proprietary funds, which are FPU and their various operating departments. But the accounting practices that had to be implemented this year for all three of those areas, if you will, deal with leases, and it's called GASB 87 in recording leases on the books. Now, at the city level and at the school levels, though the leases were deemed to be immaterial for recording in the financial statements, but they did record leases at the proprietary fund at FPU. Another paragraph in there talks about misstatements in the financial statements and uncorrected misstatements. There is an attachment, the last page, to this governance. It summarizes the misstatements that were not recorded. And it basically deals with one invoice. It was just a construction invoice that came in after year end, but it was for services prior to the end of the year. Another paragraph in there is representations. We have, this is sort of the accountants where we get, I guess you'd call it a CYA, where we ask for you to represent to us that the financial statements that have been prepared contain all the correct information and all the disclosures have been provided to us and things of that sort. And there's hopefully no pending litigation out there that we're not aware of. Another item is consultation. If the city, in connection with the audit, had any consultation with outside firms or consultants regarding questions about how things were recorded in the financial statements and so forth, and to our knowledge, none of that occurred. Another paragraph deals with any difficulties that we may have had in connection with the audit, and I guess when I say difficulties and problems between us and management, and there were none. That's about it as far as what's in that letter right there. Now, to give you a little overview of that big document that you've got bound in front of you, it's some easy reading. It's 142 pages. Give you a week to go through that. But in summary, I will kind of give you an overview of it. There is a contents page in the front, and it addresses the auditor's opinion. There's about 3 pages now. It used to be 3 paragraphs, and now it's 3 pages long. So that's what litigation does for you. Then behind that, on pages 6 through 12, is management's discussion and analysis. And if you read anything, please read the management's discussion and analysis. That is a very good summary, and we'll talk about that a little bit more here in a minute. But it's a very good summary of the financial position, the statement of changes in financial position, and debt and capital and things of that sort for the city of Fayetteville, including at the government fund level as well as the proprietary fund level. And the financial statements themselves. There's kind of 2 components in that. One is the government-wide statements, they are on pages 13 and 14. And then you have the government fund statements, which are on 15 through 17. And then the proprietary funds, which are on page 18 through 20. And then following that is the budget, pages 21 through 25, primarily of the general fund. There's also a budget in there for schools, but the general fund budget is in there. Now, so there's 8 pages right there. Following that, the notes to the financial statements begin on page 26 through 87, 62 pages to explain 8 pages of financial statements. So, some light reading. After that, there's called RSI, required supplementary information that has to accompany the financial statements, primarily dealing with the pension and retirement plans of the government funds and the proprietary funds, as well as OPEB, or other post-employment benefit plans that these funds have. Following that are some other financial schedules. Basically, that deals with debt, and for all, both at the government fund level and the proprietary fund level, and then rates, mostly all at the proprietary funds for electric, water, gas, telecom, and so forth. Sort of getting to the end of it, there's a report on internal control and compliance, pages 134 through 135. And then the last but not least is a single audit section. That's on pages 136 through 142. That's a new section for you this year, the single audit, and that is because of expending some federal funds that exceeded $750,000. We expended $750,360, so we had to do a single audit. And then finally, in the back, there's a page. It's called just a kind of a summary of findings, and that we had no findings regarding significant deficiencies or material weaknesses in internal control or compliance with laws, rules, and regulations. That's an overview. Now, if you give me just a minute, I'd like to have just some summary comments about the financial statements. On page 8 of the management discussion and analysis, because again, this is a pretty good table in there, tables. So on page 8, at the top, it's a summary of the statement of net position of the government activities, and then another column in there for the business activities, and it compares 22 and 21 for those types of funds that we have, and then it summarizes it for the total primary government. And it breaks it down, if you'll see there, far left, between current assets and then capital assets. There's some deferred outflows, and then liabilities and deferred inflows, and then the equity or net position. That's the balance sheet, if you will. And I'm going to highlight some of the changes in that, just trying to say, folks, that's a table right there. That's the balance sheet of the city. Following that, underneath it is the statement of changes in net position. That's the income statement. And again, that's broken down between the government activities and the business activities. So if you go all the way to the bottom of that, you'll see down at the column 2022, government activities, all the way at the very end, you see a change in net position on the government side of $5.7 million compared to, let's say, I won't call it a deficit, but the term is an excess of expenses over revenues the year before of $300,000. So you say, hey, that's great. We went from a deficit of 3 to a positive of 5. I'm going to come in and kind of clarify what's in that $5 million. There's some funds in there that roll through on ARPA and LPRF funds and things of that sort, both at the city and at the schools that are in that $5 million number. If you carve those out, then our numbers come down as far as that excess. And it's something to be considered when you look at our budgets that we have here. So I'll come back to it. The next page, 9, breaks down the expenditures, both at the government funds level and, at the government funds level for the various departments. And it breaks it down by 21 versus 22. And then the table underneath that is the sources of revenue for the government funds. Property taxes, in lieu taxes, which are very similar to property taxes, sales taxes, and things of that sort. The next page, 10, it has the proprietary funds, and you'll see the departments there: gas, electric, water, telecom, sanitation. And sanitation is really at the city of Fayetteville's level, but it is a proprietary fund because it charges revenues for its services. So it's not included in FPU's numbers, but it is included in the city of Fayetteville's numbers. And all the way at the bottom, well, if you look at the two items there, it says return on ending total assets and return on net position. For 22, at FPU's level, the return on net position was 5.5% compared to the year before. In 21 is 5.33. Very stable. Just a comment. A lot of work that gets there, but at any rate, it's very stable. And then you can see the various departments and how they roll out there this year. That's something that they can speak to, the various changes and so forth. The following page, 11, summarizes the capital assets of both the city, the government funds, and the business funds. I'll talk a little bit about some of the asset changes there this year. And then underneath that is the debt. There was no new debt issued by the government funds this year. And there's some pages in the financial statements that I'll share in just a minute. Well, where I talked about earlier, the supplementary schedules on debt, I believe those begin on page 113 through 133. Those are some really good schedules back there to tell you what the debt service is of the city, both in the principal and interest. It's sort of an amortization schedule, and it breaks it down by year all the way through the total payout on every debt issue that's outstanding. Let's see. Okay. Now, that's overview. If you go back to page 8, just to highlight a few of the changes. And again, this is new information for you, so probably have just to kind of give you some things to process in your mind for when you're looking through the financial statements. On page 8, and if you're looking at the balance sheet at the top, the statement of net assets, you'll see that current assets, 38 million for the city compared to 30 million the year before. And you say, what happened? How did we increase $8 million there? That's primarily due to pension assets that come through from, and we get that information always after the end of your fiscal year, and it's compiled, computed, if you will, by the actuaries at the state of Tennessee in connection with the TCRS program. It's always a year behind because they don't get that information current. So the market for 21 was a good market. So hence, almost all of that $8 million relates to an increase in the pension assets on our books. Okay, so give it to you there, and then if you look down a little bit, and you'll see a line item says deferred inflows and resources, and you'll see $14 million compared to 4.9 the year before. I just took it away from you right there. And what happens there is it's the experience side on the TCRS. And it's just how they make you report this, but their experience, and it's an actuarial computation, and what it says is that the experience is increasing. Maybe it's through retirements in the current period, and they're expecting, so they're having to refund this thing, but that's what's going on. And you can see in 21, because the market did well and these other things, it had a tremendous impact on the city's financial statements in 22. Now the reason I say this is looks pretty good for 22. Don't expect it in 23. The market's been down 22, so the numbers are going to roll. We're going to have a pretty significant, probably swing just the other way. Okay, that's going to have an impact on us in our government-wide financial statements. And I apologize, let me back up just a minute here to draw a distinction between what I'm saying when I say government-wide versus government funds financial statements. The city maintains its records on the government funds on a modified accrual basis. They book things for assets and liabilities and revenue and expenses based on what they expect to receive during the year, somewhat cash basis, but then you do get to add what is our expected experience for 30 days after year end for revenue and expenses. That's modified accrual. The board, the GASB, the Accounting Board for Governmental Entities, said, hey, government funds don't look like business enterprises like FPU. Their methodology is different. So we want the government funds to convert their financial presentation to more of a full accrual basis, just like proprietary funds have. Hence, they came up with these two new financial statements called government-wide financial statements, which is the balance sheet, which is the statement of net position, and then the statement of changes in net assets, which is the P&L statement. So there is that's somewhat, I'm just trying to draw a distinction between what's a government-wide versus what's a government fund. And there's reconcilements inside of these financial statements that explain that. That may be more minutia than you want to know, but I was just trying to explain when I say government-wide to draw a distinction between what's government-wide versus government funds. Probably confused you more. The one thing I would like to draw a point to, if you go all the way down on that page 8, the statement of changes in net position down there, and again, I'm beating on the government activities side of it, and you'll see in a column there, 22 at the very bottom, excess deficiency before transfers, change in net position, and you'll see that $5.7 million. Again, it looks real good, okay? If you carve out what the city is doing with respect to commitments in restricted funds and debt service funds, then that number actually for the general fund, if you flip all the way over if you flip all the way over to page 16 in the financial statements, if you get out of the government fund side of things, the government wides, and you go back to the government funds, in that first column of the general fund, you'll see the very bottom down there that the change in fund balance was a negative 1.6 million. So what's happening there is that's taking the effect of all this pension stuff that's going on. So when you take that, hey, we had a deficit, if you will, or an excess of expenses over revenues at the fund level, and then we convert it to a government-wide, we look really good. But you just have to be mindful of what's happening with our commitments for capital projects and things of that sort. Okay, just something to be aware of. Okay. Sort of another summary. I always tend to share this with you from year to year just to make you feel better and comfortable that things look pretty good. Debt service coverage. Bankers in the crowd of where we are. If you take the numbers for the city of Fayetteville, and I've carved it out here, city of Fayetteville, the schools, and then the business activities, the debt service coverage this year compared to debt service coverage the year before. On a composite basis for those three, if you exclude, I guess, the revenues for the LPRF funds that came in, the ARPA funds that came in, and some of the FEMA money. Now, we're going to get FEMA money for a period of time, but what I was trying to do is say, okay, let's take some of this special revenue that's coming in, kind of one-time shots. If you exclude that from our P&L, and then we compare our debt service, what would it be? And so this year, a pro forma debt service would be about 3.84 times debt service coverage, which is very good, compared to the year before of 3.48. Okay? So that's good. That's really good. Most debt service covenants ratio, and I think Jeff would concur with this, if you can get 1.15, 1.25, you're doing really good. So we're very strong. Okay? If you break that 3.84 down to at the city level, again, excluding some of these special grants and things of that sort, we're at 2.55 debt service coverage this year compared to 1.87 the year before. Again, positive and improving. Schools, 3.73% versus 1.06 the year before. Business activities, 4.08 this year versus 3.98 the year before. Very stable, very stable. Let's see. That may be getting close to my comments on this. I realize I've thrown a lot of information at you and you haven't had time to kind of digest all this. We'll be happy to, if you've got any questions now, be happy to entertain them, or we can come back at a later date. But to let you know that we appreciate all the help that was given to us on connection with this audit. Oh, a few little housekeeping matters with regard to just our firm. That with respect to us, we are subject to peer review by every 3 years by another accounting organization that is practices in the same areas that we do as far as government funds and things of that sort. And we just had ours completed in December of 21, and the result was a pass without comments rating, which is the best you can get. And so we're very proud of that. It takes a lot to do that. I don't know of anything else to go through. I would request, notwithstanding the questions, that the board consider approval of these financial statements at their full board meeting next week so that it can be presented to the comptroller's office, and we can also get information submitted to the for the single audit up to the federal government type thing. Anybody have any questions?
That's thorough. Appreciate it.
Well, I probably took. Jamie said I had 5 minutes. I never can get through in 5 minutes.
Mr. Hancock, I have one question, please.
Sure.
So you've completed the audit, it goes on to the comptroller. The board has received an email concerning our budgets, beginning with the deficit, ending with the deficit. Is that something you think that the comptroller is going to come back to us with after presenting this?
That's a good question. Not generally, and because we have had that excess of expenses for both 22. I think it looks like that in 23 on the budget. I think there's probably some changes that you may make that will help that. But generally at the general fund level, as long as we have an equity, general fund equity, and we have, if you go back to your balance sheet here on the government-wide, if you look at just at the fund level, which is basically cash, as I mentioned, I'll get to find the right page here. Well, I must be having it right in front of me. I'll change it. We're very strong. I just got to find the number and to share with you. Here we go. Oh, here we go. We have a fund balance in the general fund of $11.6 million. Very strong. So as long as we have a fund balance and we're not spending into a deficit situation, I don't expect them to send us a letter. You've looked at it, you're aware of it, you've got some capital projects that are in place, and that's what's causing this deficit. So I don't see that as being an issue. Where it comes into play is in water funds and sanitation funds, where if you do have a current year operating deficit for 2 years in a row, then they will send a letter and say, what are you doing? You generally respond by saying we're aware of it, we're making efforts in changing our rates and so forth. And in fact, they did send that to us on the sanitation fund last year. I think we had less than $1,000 deficit. This year, to go back to that same statement, you've more than made up for it. Sanitation, where am I? The sanitation's fund had a profit, if you will, of $101,000 compared to a deficit the year before. So I don't expect to have a comment from them on that. But it's generally at the water fund level and sanitation on the proprietary funds, but not as long on the government funds as long as we have a equity fund balance position. You generally don't see that.
The reason I asked that because I remember getting that letter after everything last year, and it's just a practice that we need to correct.
Be mindful of, yeah.
Because we are responsible for the citizens' money, so just
exactly.
Practice that we need to clean up.
Right.
Okay, thank you.
I'm a little confused because of the last year, or the letter that we got from the comptroller didn't mention any of that before this email. So where does that play into that?
Different players up there in looking at that. Now that letter from the comptroller, and I can't remember the specifics because we're aware of it. It's not a finding, it's just an observation that they want the governing body to be aware of, that you have a deficit and you have a deficit and you're aware of it. Now, I'm not sure I follow.
Well, I think the word deficit is what's throwing me for a loop here because we didn't hear that.
Well, and that's
In
a
the report
poor
from last
word. It's just excess of expenses over revenues and at the sanitation fund level last year. And
Okay.
it's and like I said, it was less than $1,000.
Okay.
So it really wasn't material to talk about.
Okay.
We raised our rates at
You
some
did.
point. Take care of all that. Okay, you give us reports, you do the audit. How strong are we as a city government in our finances?
Well, if you look at it just purely, if you just say, I'm going to look at their debt service coverage. If you're going to the bond market, how strong are we?
How strong are we?
Very strong.
How strong are we in how we've operated and maintained our budgets year to year, in your opinion?
You've got some commitments that you made in the let's say going back in 21, and with funding coming in and so forth for some capital projects.
Right.
You've got a fund balance and you've got cash.
Right.
Okay? You've got the money to pay for this, but if you may have to dip into some of your idle funds to pay for some of these capital project commitments or capital projects that you would like to do. I don't know that you've got commitments on them yet, but on some of the capital projects. Strong? Sure. Can you sleep comfortably at night? Yes. Is that a sufficient answer on that?
But as of now, with the strength of the fund balance we have, we in good shape. Right?
Yes, sir. Yes, sir, you are.
Bottom line.
Jamie and I have been talking, and Kevin as well, about some things. I think they're going to be presenting to you on budget for 23 to make some changes and so forth. But it's, again, I'd like to say that they're really watching it, paying close attention to it, and being very proactive in it, and letting you know it's going to come. It's kind of hard to change. I mean, your budgets. I think you heard here last week that you're on track with your budget and so forth. So it's tracking. I don't know what else to say on that. What's in that budget is going to come unless you make some changes.
Okay. Thank you.
Okay. Anything else? Again, if I can request you to take a look at this and let us know about, or if we need to come back next week, we certainly will on that. After you've had a chance to look through these 142 pages. Jacob, you weren't here to start with. I was going to kind of go through some detail with you. It's a nice read for 142 pages.
I will get on it.
Just give me a full report next week on that. Anything else? Did I miss anything? Okay. Thank you.
Thank you.
Thank you, sir. Yeah, real quick, I just want to apologize to the board. We had a late call this morning, so I was trying to get here as quick as I could.
Okay, now that we've got all that good news, bad news, we're going to move on to item number 3, and this is the department reports. First up is Public Works. Eddie Plunkett.
Currently, we have 31 carts remaining. We know where 21 of those is going to leave. Will be going. That'll leave us 10. We'd like to buy 30 more for $2,385, and it could take us up to 6 months to get those.
Any questions for Mr. Plunkett?
Eddie, remember when I talked to you about, have we figured out a problem about how the garbage cans filling up with water and things have we figured something out, possibly, to keep people from complaining?
Keep the lids closed is all we can ask.
Okay. Just as long as they don't pour grease down in the garbage can?
Correct.
So I'll tell you that me and Eddie had a conversation about maybe putting holes in the bottom of the trash can because that's what I do at my house, and I've never had a problem. But he made a good point that some people pour grease in the trash and it leaks out into the road. So, but we're working on it.
That's all I have, Mayor.
Okay, is this, the $2,300, $2,385, is this in the budget? You have this?
No, ma'am, it'll come out of sanitation.
Sanitation, okay. All right. No other questions? Thank you. Okay, item B is the police department. Chief Pendergrass?
Thank you. Like Mr. Painter, I have to apologize for being late. I drove up on a small domestic dispute in the middle of the road in Park West City I had to stop and deal with. So
Oh, no.
I've got 3 items for you. First is a replacement vehicle, the difference between the cost of the insurance reimbursement and the cost of a new vehicle. The difference is going to be about $10,726. Part of that's depreciation, part of that is new equipment that'll have to be put in it, and part of it is we took a lesser amount to keep from the insurance company to keep possession of the truck because we had to remove the emergency equipment from it, and we're still waiting on the vendor to get with us to get that done. However, since we do have the truck, once we get this equipment out of it, we can sell the truck and recoup some of these costs.
Did our insurance pay for that or the other person's insurance pay for
I believe
that?
it's the other company, the other person's insurance, yeah. It was an unoccupied police vehicle that was struck from behind at an accident scene, so yeah, I don't see no reason we would have had to pay for that. Well, I know it. I know the other insurance paid for it. Second, I have 2 event permits. First is the Slawberger Chase 5 and 10K run permit in April. And the second is the Firecracker Chase 5K run in June. As you're aware, these marathons require a lot of overtime, so we'll have to have pretty much a full squad in for both of these events just to block the number of streets that it will require. So I moved these forward for your consideration.
Does anyone have any questions for Chief Pendergrass? I want to ask on these runs, I know this has come up in Parks and Recs before. Are they kind of spacing out on the time so that you are not having several runs in a month? Is it kind of leveling out? I know y'all were going to work on the scheduling of things.
They seem to be working together to try not to put them back to back. One, it takes away interest in their run if they put it right next to somebody else's, so they want to space them out. And, so yeah, we've not had a problem with them being back to back yet.
Okay, that'll give the police department some relief on their overtime. And this is a good community, the running community, they try to work together.
Oh yeah, good folks, good. And there's just so many runners, so if you run in one, you're probably going to run in the other.
Okay, if no further questions, we'll move on to fire department. Thank you, Chief. Chief Kimberoo.
Good morning.
Morning.
The first on the agenda is to have an oath of office for Nick Barron. He's a new employee that we've hired, and so I just need to pass it through and do the oath for him. Second is permission to apply for an FM Global grant. We will be asking for a new some fire prevention equipment, a sound system and a TV for the fire prevention house, and a new Sparky, the costume dog that we take to the schools and stuff. The total for that grant is $4,185.70. It is a 100% grant, so there is no match from the city for it. Second, I'm asking to purchase 2 sets of airbags. The total for those airbags would be $28,270. We currently have 3 sets, but I'm asking to buy 2 right now, 2 of the smaller sets. The airbags we currently have are expired and out of date. And like I said, the total on it would be $28,270.
What do you do with that equipment that goes out of date once you replace it?
Well, I found one company that if we purchase the new bags from, if we get approved for that we could possibly trade them in and get recouped just a little bit. It's only like 10%, but that is a little bit coming back. Anything else we could possibly sell to go on Gov Deals or something like that, but they won't probably go to a fire department. It would be somebody that's just wanting a set of airbags.
Tony, I got a question real quick. So, on these airbags, does every fire apparatus have to have these? Every engine have to have them?
We put them with our extrication equipment in case whichever truck gets on scene first, they have a set of airbags to start in case the other truck is delayed for some other reason, being on a medical response or something, another call that they can't break away and get to them at the same time.
Okay, so just this one set on just the rescue.
We have a set on each engine, and then we have a set on the rescue truck. The set that's going to go on the rescue truck is the one I've asked for in that grant,
Gotcha.
the AFG grant that we asked for last week.
So all of them aren't out of date, just these two.
All of them are out of date. Yes.
Okay. Well, let me ask you this. Let's see if we did this. So, could we possibly maybe this year, if we was to go and purchase this one set, and then say maybe next, since they're 15 years that they go out,
Right.
purchase another one next year, purchase another the next year. That way, we're not spending this much money on all three at the same time. Or
I mean, we could do that, but
Okay.
you're going to run a liability if we have that other set still in the truck. If we run a liability with them.
okay.
So.
Any other questions? If not, this will move on. Thank you.
Thank you.
Item D, Parks and Recs. We have Brian Carter.
Good morning.
Good morning.
Our platforms have been constructed and they are installed down at Don Davidson Park. The next step will be for the transformers to be attached, and hopefully that will be done here within the next couple of weeks. Our S.J. King restroom concrete bollards, we have gotten quotes on those and specs for those, so hopefully within the next coming month we'll have those installed there. Our spring sports, we've got sign-ups for those for softball, baseball, and for also soccer leagues, and we're looking forward to starting those leagues in April. Pool house floor painting, as soon as the weather warms up and we get some good dry days, we will have those pool house floors painted. We've been waiting to get that done for a while, so hopefully we can get that taken care of. If you notice, we have our Parks and Rec calendar for 2023 attached, and we're looking forward to working through that and having a good year. And on the last item that I have is for our strategic plan. Kevin and I and the mayor, we were in a meeting, and what we come to find out is basically for grants, if anything that we need to get done for grants, we need to have a strategic plan. Kevin and I, we got with Roy last week, and we're in the process of getting that done. So hopefully that will be something that we can get accomplished that will help us out. And that's all I have. Any questions?
Any questions for Parks and Rec? Brian, I would like to ask, on the calendar of events, this is something that you'll be putting on the website?
Yes, we will.
Okay.
Yes.
Because that way the public can see and know what's
Exactly.
coming up.
Yes.
Okay. That's great. Any other questions? Okay, thank you, Mr.
Okay.
Carter. Now we have Christy Gentry, Director of Planning and Codes.
Thank you, Mayor. The first item on our agenda is Resolution R 2023-05, the ADA Coordinator Procedures. Basically, it's been decided that the ADA plan that was adopted by the board will come through the Planning Department. So we needed to update the resolution to come into compliance and reflect that change. It does name myself as the ADA coordinator, and I will be the one periodically throughout the year to give ADA plan updates to the board. The second item is the 2022 Planning Commission Annual Report. This is an annual document that the Planning Commission sends up to the Board of Mayor and Aldermen for their approval. This document was approved by the Planning Commission at their January 24th meeting. It lists each month approvals on projects that were issued. It lists the commission members, their years of service, and it also lists our training and our goals. This year, our goals are to complete the sign ordinance update and to do a few zoning ordinance amendments. And then one thing I did want to mention that we discussed in our IT and Planning Committee meeting is that we will begin working on updating the banners. We will get a few proposals together and then bring through the committee meeting process for consideration of approval.
Okay, thank you. Do we have any questions of planning and codes? Thank you. Next up is Zach Sibley with IT Department. Where is it next?
Good morning.
Good morning.
At last month's committee meeting, it was pointed out to us there was some outdated information on our website. So we began working with the other departments to try and find what information needed to be replaced, what stuff needed to be touched on. So we went through, we tied it up a bunch in administration, finance, IT, planning, and police. There was also some redundant info. Stuff was copied in multiple places. We tried to take out any redundant links that we could find. And also just cleaning up the formatting, making things look neater, stuff like that. What else? Other than that, as far as I know, there's a lot that's been touched up, but like I said, anything that y'all find, feel free to email us and we'll take a look at it, see what we can do to try and get that taken care of. Yeah. Other than that, Lucas and I have been working on certifications. Lucas received his Network Plus 2 weeks ago, and also I received my Security Plus last Thursday.
Great.
So I'm happy to have that behind me.
Congrats, man.
Thank you. We had a bunch of pending Microsoft updates in our WUS server. I went ahead and tested those on our test machine, and everything was okay. We pushed out a lot of updates to all the machines. We're all up to date on our patches. And as always, we're testing our backups to make sure that what we're backing up, the integrity of it will work when we put it to a new machine. And everything's good. Like I said, we back up in 3 different places. If one was compromised, we've got 2 more in different locations that we could bring those back from. As of right now, our computer infrastructure is just trucking right along.
Good, thank you. Any questions for Mr. Sibley? Okay, thank you for your report. Okay, now we're up to finance. Finance Director Jamie Owen is here.
The first thing you have in your packet is the monthly reports for the local sales tax. Current year, last year, we're at $286,635, and for the current month this year, we're at $296, which is a positive increase of $153.08. We are at 55.18% of our $3.2 million budget for local sales tax. And then on our occupancy tax, this month last year we were at $9,798, and current month for the current year we're at $12,153, which is an increase of $22,576, and at 69% of our annual budget of $160. And then our property tax for December of last year we were at $735. And for December of last year, for the current year at $463, which is a decrease of $365. But what I did is went ahead and looked through January. Year to date through January last year, we're at $1,479,479, and then current year to date through January at $1,460,000. So that only puts us down $18,000 of where we were this year to last year. So we're pretty much in line through January. So I went ahead and looked ahead for property taxes. Do you want me to do the first item?
Yes, go ahead, please.
Okay. Number 1 is a Fayetteville City School pass-through for their number 15 invoice for the gym safe room. as well as number 2. It's their number 16 invoice for the gym, which is a pass-through as well.
Okay, and that's standard, we just pass it?
Correct.
Jeff, has there been any movement in y'all's committee as a city thing?
I mean, it's just all these small things going on right now. It's still just the pass-throughs coming to us for these here, but it's everything keeps going, but it's slow.
Material, they haven't broke ground yet, though.
I don't think so.
Okay, next we have the ordinance 2023-02. This is a City of Fayetteville budget amendment. Do you want to speak on that, Jamie?
Sure. The first line for your budget amendment is for the fire department for $5,431. This was emergency repair for their turbo, I believe. The next 2 lines are for the waste collection salaries. That was part of the ARPA. I did the original request for 110-43230, but actually the budget is in 122. So that's a net zero effect, but I needed to move it to the 122 fund. So what I'm working on is trying to have those expenses hit directly to 122 versus 110. So that'll clean that up, but it's just moving it from 110 to 122.
So in the future, that would prevent the...
Yes, it just happens in 110 and it's a journal entry to 122, so I'm trying to have it directly hit to 122.
Okay, thank
Sorry.
you. Any questions on the ordinance? Number 4 is a request to remove budgeted capital transfer.
Yes, this is a request to decrease the expense out of the general fund to the capital fund for the $500,000. Just since we may not be doing the Greenway project, just to leave that funding into general fund for this year and then looking at what we need to do for next year's budget.
Do we have any questions on that? Item number 4. Thank you. And then item number 5, this is Fayetteville City School. This is a budget amendment.
Yes, this is a Fayetteville City School. This is their first budget amendment, which is just a pass-through. That's no impact to the city.
Okay. Item number 6 and 7, if you want to explain those.
Yes, these are HVAC repairs. The first one is for $1,680. We're proposing that to come out of the general fund. And then number 7 is also HVAC control panel repairs for $4,430. I've reviewed our budget and we can cover those in our building repairs 260 account. So what I'll do is request during next month's review or next month's budget reviews is to move from one account to another. So it'll just be a realignment, but we do have the money currently budgeted. So I'll just request it from one account to another so it'll realign those, but it'll be a budget neutral. So we can cover those with our current budget.
Okay. Okay, any questions for Ms. Owen of the finance?
Okay.
Thank you. You're doing a great job. We appreciate you. Okay, item 8, administration. Mr. Owens.
Good morning, Mayor, as well as Board of Aldermen. I'm going to punt item 1 and 3 to John Hill because 3 is actually in negotiation, and I think John has a resolution for number 1. And I'll go ahead with 2 and 4 and then allow him to go back with 1 and 3. But on number 2, we have the Fayetteville Lincoln County Library. They have a HVAC system that needs to be replaced. It's out of whack. Megan was here for Finance Committee, and it's a total of $24,000 and some change, but we have split it between the city, the county, and the Friends of the Library, and our portion would be $8,116.67. if we decide to consider being a partner in this particular project.
Do we have any questions on the library HVAC replacement? I know this system is the original heating cooling system for the library, and they have been closed numerous days where this system has been down for one reason or another, and they've done all the repairs that they can do. So I think this is a good thing. Any questions? We'll pass that on. Okay, number 4?
And number 4, you will find a report, a quarterly report from the Humane Society on the animal control. They will be here on next month, but this report is similar to the report that was given to the county, trying to keep the board informed. So we wanted to make sure you were able to review this report. As mentioned, they are expected to be at the work session for next month to tell what is going on. Right now, excuse me, right now we do have a weekly meeting between the county and the Humane Society, and that is in an effort to try to make the needed repairs that are there, which this board has allocated funds towards. So we're meeting weekly throughout the month, and you will hear more about that. And since I mentioned upcoming work sessions, I think last month it was asked that the sidewalk presentation be done. We did it in committee, and they will be here at work session in March, as well as we're working to get state concerning the Camp Blunt project here at work session on next month. And that's with that agreement between the city and the state. So Nina, I think, still is expected to be here next month in March. So we're working it out now.
What's the purpose of that?
Well, just bottom line is that additional, back in the fall, she wanted to come to the board, so we were just looking for a time to discuss what their relationship was.
Okay.
So it's just a general discussion.
And also, is she going to review the agreement between the city and Camp Blunt? Is she reviewing that too? Or?
She's going to talk about all terms of anything you all want to bring. Okay. We're still trying to work out the time as far as she being here, but she has that on her calendar.
Okay.
March 9th.
Okay, thank you.
And just to conclude the report, I think Attorney Hill has a resolution for number 1, and we're in negotiations for number 3, so I'll allow him to explain when I pass out.
So the number 1 item is the FPU purchase of 11.74 acre tract in the Brookstone Common subdivision out near Cary Addition. You're all probably aware that there's a gas infrastructure in a small tract, and there's a larger tract surrounding that. APU has made a deal with the subdivision developer that owns the larger tract to acquire the tract partially with the payment from FPU and partially with basically a donation from the developer based on what the appraised value of the tract was. I have been working with FPU's attorney to put together a resolution, and I think that's what Kevin's just passed around, and I've gotten his approval overnight for this. And the guy's here, he may have something else he wants to add to this.
I'll be able to answer any questions, Madam Mayor, if you got any. But I know that we're still been working on this for quite some time. I know we'll have to go back and review what the resolution says, be sure that we're correct on everything.
Okay, do we have any questions for Mr. Dye? Thank you. This will move forward till Tuesday night.
And I will say this, with some experience in the past out there, this is a good thing.
Good.
Very good thing.
I agree. For safety issues, it's great.
Yeah, it has all go to safety. Every bit of this goes to safety issues, and if this gets, if we put this in the title of the city or FP or whoever, it's all the same anyway. It will maintain those safety issues for the future. And it really cut down on any chance of maybe something coming up that drags us back in the court or litigation or whatever. This is really a good move right here.
We appreciate you working with that, negotiating this. Looks like a pretty good deal, so thank you. Okay, Mr. Henry?
Item number 3 is on the soccer complex, the parking lot at the Lee Building. Kevin and Brian have been working with the property owners, which is a New York firm that owns the Lee Building now, and had gotten them to agree to allow us to use the parking lot, and kind of then got handed off to me to put together the paperwork for it. The one request that they made in the course of that was that we add them to our insurance as an additional insured in the event that there was an incident there and we both sued over it, which I thought was a completely reasonable request. So Ashley and I have been in contact with Public Entity Partners. Because they only insure governmental entities, they're not able to add the property owner as insured. So we have consulted with an outside private insurance agent about the possibility of just getting a specific policy for this particular location. We did that. It turned out that we needed to be renting the property rather than just being allowed to use it at no cost, and the rental amount was of no consequence as long as we were renting it, and the property owner was fine with doing a $1 a month rent on that as far as that's concerned. So that'll be a negligible cost to the city. But we're in the process of putting together some numbers on potential insurance policy. The limits that they asked for were higher than what we would normally see in this geographical area, and again, they're Wall Street area, New York firm, so that may sound perfectly reasonable for them. So we're trying. I think it's obtainable. It's be a matter of how expensive it is, and if it looks exorbitant, we may have to go back to them and try to impress upon them that maybe those limits are out of line with what we would normally see around here, and bring that down. But we're basically having an agreement in place, subject to working out this insurance issue, which is we had multiple interactions with them yesterday and for days before, so this is very, very much in process right now.
Okay, so do you think this would be more something this month or maybe pushed to next month, or it just depends on their response?
I would say depend on their response. It's a possibility. We'll know the numbers by Tuesday, but if not, we'll just have to bring it back in March.
And I would say, we should at least have some numbers by Tuesday, and know. I'm sure Brian would like to get this nailed down this month, if at all possible. This soccer season is not too far off, so we could always do the insurance acquisition beyond just the agreement to enter into an agreement with them, if we had some general sense of what the cost would be. So I'm hopeful that we can get this in a position to have on the agenda next Tuesday.
Okay. Do we have any questions concerning the parking? Okay, if not, we'll move to our final section, and this is some appointments that I need to make on the Board of Appeals. There's one person that's been on the Board of Appeals for quite a number of years, and he is deceased, so we're going to have to fill that position. It's been vacant for quite some time now, so we need to move to get that position filled. Also, there was another member on this board that chose not to serve any longer due to personal reasons, and that position has been vacant for quite some time. And so what I want to do, I would like to appoint Brenda Neely to the Board of Appeals. She's the local realtor here, and her term to expire July the 1st, 2024. So she will be fulfilling Tom Bailey's unexpired portion of his service. Do I have a motion?
I don't know, we need motions on work sessions. Carry it on to the next.
Just carry it on?
Yeah.
Okay, any questions on Brenda Neely? Also on this Board of Appeals, to fulfill Kevin Hammond's position on this board, I would like to bring forth Joey Wooliver. He is a local contractor here, HVAC person to serve on this board. I would also like to appoint Vince Kearns. He is currently on this board and has served on this board for a while. His term expired July the 1st, 2022. So this would make his term expire July the 1st, 2027. These are 5-year terms on this board. Also on the Planning Commission board, for the utilities appointment, let's see, for the utilities appointment, I have spoken to Randall Griner. He would like to continue. He's employed with FPU, and this term is the term of the mayor. So this will be an additional 4-year term for Mr. Griner. So we'll bring all of those to the board on Tuesday to vote on those. Is any other questions or comments? If not, we'll adjourn this meeting.